In this video, we're going to be talking about the 5 most common mistakes that I see prop firm traders make. I have been trading with prop firms basically since they were introduced in the trading space, and I therefore understand a lot of the mistakes that you are making because I was once making them too. I have also taught hundreds and hundreds of students who also use prop firm accounts, so it's very easy for me to see these common mistakes repeat over and over again in different people. I do a lot of these prop firm videos because I understand that the vast majority of my following are trading with prop firms, and I want to do my best at helping you pass these evaluation accounts because, again, all the odds are against you, and even the prop firms themselves are against you. So it's my job to make sure that you are trading with the probabilities on your side so that you can pass these evaluation accounts. So without further ado, let's get right into the video. So the first thing that we're going to be talking about is expectations, okay? A lot of people have very, very wrong expectations when it comes to prop firm accounts. When you're trading with a prop firm account, there are a lot of rules that you have to follow, and that is exactly why you cannot treat your prop firm accounts the way you would treat a personal account. Now, the reason why people have false expectations is because they see so many people on social media that flaunt their payouts. They make it seem very easy and attainable to get very, very high payouts on a weekly basis, when in reality, that's just not the case. The people that are getting payouts on a weekly basis, and especially large payouts, they are over-risking a lot, and I guarantee you that those funded accounts are not going to last them very long. It's very hard to trade with a prop firm account and expect longevity, especially if you don't consider your risk. Some people will say, well, I consider my risk and I do 1% risk. Well, that is not sustainable, and I guarantee it, okay? 1% risk doesn't seem like a lot, but when you're trading with a prop firm that has a maximum drawdown and a daily drawdown, well, then 1% risk is a lot, and it's basically impossible to have any longevity in it. So understanding that prop firm accounts take a really, really long time when you do them and trade them properly, you're supposed to approach these prop firm accounts with a longevity mindset and not a payout mindset. That is what people are getting wrong. They're approaching these funded accounts because they want to make money. Instead, they should be approaching the accounts expecting this to take a really long time, looking at it as an opportunity to build good habits and follow good rules, especially because if you don't, you will lose the account. Now, the first one takes me right on to the second one, which is risk, okay? A lot of people have a completely wrong risk approach when it comes to funded accounts. The vast majority of people are risking 1 to 2% per trade, which is just completely wrong in my opinion. The reason for that is if you're trading with a CFD firm or a forex prop firm, well, then the average max drawdown is around 10%. That means that you can lose an average of 10 trades in a row before you blow the account. And while there's a pretty low chance that you're going to lose 10 trades in a row, it can still happen. The reason why there's no longevity in these prop firm accounts is because they don't allow for drawdown periods, which basically every single trading system has. There is not a single trading system on planet Earth that does not go through periods of drawdown, okay? And these prop firms do not allow for that, and it becomes extremely clear with these maximum drawdowns and these daily drawdowns. Now, what you can do is approach the risk differently. So instead of risking 1%, you can now risk 0.1% or 0.2%. Now, yes, this is going to take a much longer time, but this is the only way that you make sure that there's any longevity in your funded accounts. Because with a 1 to 2% risk approach, well, then these periods of drawdown are going to ruin your accounts. They are going to liquidate you. But if you're risking 0.1 or 0.2%, while it may take you a lot longer to get the payouts, you can also survive the periods of drawdown that every single trading system will go through. So people have the wrong risk approach because they've been told basically ever since they started trading with prop firms that they should trade 1% per trade. And for the people that are trading with a futures prop firm, there is typically a 6% maximum drawdown. That means you can lose 6 trades in a row before your account is blown. So again, a lot of people are over risking. What I recommend to people, and especially within my community, is what I call base hits. Now, base hits is essentially small amounts of money over a long period of time. So even though a $100 trade here or a $200 trade here may not seem like a lot in the moment, when you look at it over time, it really, really adds up. That is the beautiful effect of base hits, okay? It may not be as exciting and you may not make as much money in a singular trade, but I guarantee you this is one of the easiest ways to make sure that there is any longevity and success within your prop firm trading career. So I always recommend anywhere between 0.1 and 0.5%, and 0.5% is in the really, really high end. That way you make sure that if you go through a period of drawdown, that is completely fine, because your risk allows you to do so. Now, the next one right here is impatience, okay? Now, this also overlaps with the unrealistic expectations. people think that this is supposed to go really, really fast, when in reality, fast money is also taken away just as fast. The things that take a really long time to build up are also the things that are going to hold in the long run, right? That's what there's longevity in. So some people may pass an account within 1 week and get a payout within the second week. And then you may sit at home and say, well, I've been on this funded account for 2 months now and I haven't even passed it yet. When in reality, the guy who passed it in 1 week and got another payout in the next week, he's probably going to lose that. Well, not probably. He is going to lose that account way faster than you, okay? So by taking it slow, you are securing longevity. The reason why people are not taking it slow is because of impatience, okay? They want things fast, and that is a real problem in this industry. Not only in the industry, but just in general. People nowadays have this urge for instant gratification, which is ruining their chances of becoming a profitable trader because it takes a really, really, really long time when you are doing it the proper way. So please try to understand that this is going to take a really long time, whether you're trading crypto, forex, prop firms, personal accounts, it doesn't matter. It's going to take a really long time. So don't try to cut corners by upping your risk when there's absolutely no need to do so. The next thing here is compounding, or the effect of compounding, okay? And what I mean by this is, while a $100 win here or a $200 win here may not seem like a lot, over time, when you have maybe racked up 10 or 20 prop firm accounts, that $100 win or that $200 win is all of a sudden a lot of money because you compounded. So let's say you are copy trading 10 different accounts, and every time you win $100 because you are focusing on the base hits that we just talked about. Well, then that $100 on 10 different accounts now becomes $1,000 every time you win. And that is the effect of compounding, okay? If you have 20 accounts and you win $100, well, then that's now $2,000 that you are winning every time that you are winning. And that is why all of this goes together, okay? Please understand it's going to take a long time, but you just have to have faith in the effect of compounding because that is where the real money lies. All of a sudden, you have the right risk approach, right? You can sit through periods of drawdown because you're not risking a lot. And at the same time, you are making massive amounts of money every single time you are winning, because you understood that, okay, I'm going to take the long route, but I understand that in the future, this is going to pay off. By trying to cut corners, I am basically setting myself up for failure in the future, and there's absolutely no longevity in this for me. Trust the process of compounding because I can tell you through experience that it is real. Focus on base hits, and eventually you will have so many prop firm accounts that these small base hits now are extremely, extremely large hits. People are failing prop firm accounts because these prop firms make it seem very, very easy to earn a lot of money very, very fast. And that's what I mean by they want you to fail, okay? You cannot do what these prop firms tell you to do or advocate that you should do because it is marketed as a very, very fast or easy or get rich quick scheme when in reality it is far from the truth. You may get lucky here and there with a payout, but in the long run, it is not going to be worth it unless you approach it the exact way which I just explained. Now, this last one here is logic, which is a little bit more of a technical one. And what I mean by logic is I see so many traders who will have no logic behind their partials, no logic behind their stop loss or their break even. Essentially, most people only trade with a take profit logic. So for example, people understand that, okay, I want to see a bounce from here and I want to use this as my take profit. I want a 1 to 2 risk reward, so I'm just going to place my stop loss wherever that is. That is the completely wrong approach, okay? You must have a real understanding of why am I placing my stop loss here. There must be a point of invalidation where my stop loss is. There has to be just as strong of a reason to place your stop as to your take profit. So you need to have a very good and long explanation behind your stop loss, take profit, break even, and partial points. We have control of so little as traders, so the things that we do have control over, we better double down on, which is, again, where we place our stop, our take profit, when we go break even, and when we take partials. So you need to have a full-on understanding of every single thing that you do, and there needs to be logic behind all the things that you do as a trader. These were the 5 most common prop firm mistakes that I see people make, and I think if you focus on the things that I just showed you, you have a much higher chance of succeeding when it comes to prop firms. You are going against all the odds, so please do everything that you can, even though it's not as fun and it is going to take a lot longer time. This is the right way to do it. This is how to beat the odds, because most people are not willing to do this because it's not as fun and it's not as instant, right? There's no instant gratification in this, but there's not supposed to be. Again, thank you a lot for watching. I really hope this helped you out. Let me know if you can relate to any of these mistakes, because I believe that we've all made them. And that is exactly why I decided to do a video on it. So thank you a lot for watching, and I'll see you in my next video.